Hello, everybody. Welcome to my new trade recap of last week. So yeah, last week was minus 2.2% week. I took two trades, EURJPY, US oil. All of them, all the two are -1, and US oil a little bit more than -1. So yeah, because previous week before that, I had almost 7% gain in profit because the markets were very good. But yeah, now this week it's logical that it's less better. So that's why I have two losses followed by the plan. So if I go to the first trade, EURJPY on the monthly chart, you can see I drew here a monthly horizontal black line here. At 2015 it was. And 7 years later, we touched this zone. So I expected some kind of bearish momentum like this here, some bearish momentum, at least a half of it. But we had here a very big bearish momentum, and now we are having also some bearish candles. So that's why I expected the bearish momentum to kick in. So we had that monthly bearish candle close. We had a monthly flip completion from the low here to the high, which is very nice. If you took the round number to the downside, it's a monthly minus 27 flip completion. If I go to the weekly chart, then you can see we have also a flip completion from the low here to the high. Exactly, very nice here. And then we went to the downside. So very nice to see. We had here also that bullish M that could work against us for that fifth leg to play out, but I was expecting some more downside momentum till maybe this weekly lows here, that higher low. We also saw here a smaller bearish W forming on the weekly. We had that first candle, first leg, sorry, second leg, third leg, then that weekly bearish impulsive candle close, and then the fourth leg for the potential fifth leg to the downside till the potential weekly low where the minus 6080 is sitting at from the daily. So if I go now to the daily chart, I want to see a pattern, and that pattern was this bearish W here. Normally you can count it like this, 1, 2, 3, 4, but then it's a bigger pattern for me. So if I look it more clear, then we have this 1, 2, 3, 4, 5. So then I was seeing, okay, this is one leg, the second leg, the third leg, then this is the fourth leg, and then the potential fifth leg. So that's why I was not counting it as a big pattern, because our first leg, so this first leg is bigger than the third leg here. This is the third leg. So that's why I was not counting it as a big pattern. So I was drawing my IC as my daily zone of interest. We had a descending trend line holding the price down from the daily. So I went till the 4 hour because we touched there our daily zone of interest. And then what we had was in that daily zone of interest, we had that first candle, second candle. The third candle is a bearish candle close, which is a must. And after that, I could set my limit on this zone. And then, yeah, we went a little bit to the upside, downside, and then it was a minus 1% loss. So it was a trade followed by the plan. Then US oil, if I go to the monthly chart, on the monthly, you can see that we were still making here this bullish M here. We didn't touch the week monthly higher low yet, but we're already making here some kind of deceleration here, the first candle, second, third, and a possible fourth, but we went to the downside after that. We had here also some monthly supply and demand. So if I look, we had here some resistance, some support, and here some support, almost resistance here, but not touched there. So it was a monthly supply and demand zone. We had here a structural monthly ascending trend line. If I go to the weekly, you can see it more clear, like this, the structural weekly ascending trend line aligning with that weekly bullish candle close we had. We were still bearish on the weekly. We had also still a weekly flip completion that needed to be tapped. So that was also the thing that was against us. We had that bearish W against us here, first leg, second leg, third leg, fourth leg, and then the fifth leg that was already in play, and now we tapped it. So that's why we went to the downside, but that weekly bullish candle close was there on that weekly lows. So this could be a potential false break to play out. with the ascending trend line here from the weekly and monthly. So I went to the daily then because we had a weekly bullish candle close. So what I saw on the daily on US oil was that we had here some kind of structural ascending trend line here from that shoulder 1 week till the head here, which was aligning with the diesel on the daily inversion and shoulders. So what I saw was the daily inversion and shoulders. So we saw here that shoulder 1, head, shoulder 2, and then we could go to the upside to the daily -27, which was could be a nice trade. We closed very impulsively. So this was maybe a sign, okay, on that shoulder 1, we impulsed very aggressive to the downside, and we closed very bearish. But yeah, I just followed the plan, and yeah, if I have diesel on the daily shoulder 1 zone, then I can take it, align with all the different stuff around it. So if I go to the 4-hour, you can see we had a clear diesel at the daily zone of interest. We had the first candle, second candle, third candle, and then the fourth candle. I took my limit because we had already one 4-hour bullish candle close. So I could take this trade, and yeah, I could take this for that possible shoulder 1 here, head shoulder 2 that could play against us. But yeah, we went straight to the downside, so nothing to do about it. Minus 1.2% on that trade because of the spreads, I think that was. And yeah, because of the spreads, it was. Then the missed trades, these were also a few. CHF was because I already entered EURJPY, so I couldn't take this one. It was at Tuesday, 3 a.m. Yeah, so I was still awake and I took a EURJPY before CHF. Then gold euro, I missed this trade. So if I go to the weekly, we had here that weekly bullish candle close. We were here at that structural monthly ascending trend line, as you see, structural monthly ascending trend line with that monthly bullish candle close. On the weekly, we had that weekly bullish candle close. We are still bearish on the weekly because this is our high and this is our lower low. So lower high, lower low, everything between that is just a correction for more downside momentum. But what you can see, the difference is very nice that we had here some bull flags. So we had here our bullish impulse, and then the corrective nature counter to the trend. All this is corrective nature still trending in this descending channel for potential breakout. Yeah, for making new highs, potentials, new all-time highs maybe in the future. So that's why I was also bullish with that reason. But the weekly was presenting itself for that weekly bullish candle close. Then I went to the daily chart, and on the daily chart, what I can see already was we had here a potential inversion and shoulders. We had here that potential inversion and shoulders here, but this wasn't the case because we went straight to the daily lows. So I moved my daily zone to the daily lows, and then we had also some kind of smaller bullish M, bigger pattern here, like this here, the bigger bullish M with an inversion and shoulders. But we went to the daily lows, and I saw, okay, we could have a 4-hour pattern, but I was setting my limit on the beginning of correction here because I tested it after one candle that is closing above that high here. So you have that low, high, higher, low, higher, high. If you have one candle closing above that high, and then the other one is coming mostly of the time straight back to the beginning of correction. That's why I took there the limit, and yeah, maybe I can do it more on the 4-hour higher low here, so maybe it's better to do that. But I tested it and it works also, so that's why I missed it. I could place it here, and then it was a break-even trade for me with a stop loss like this, yeah, like this. Then it was a break-even trade, and then it took me out. Then Euro NZD. Euro NZD, I didn't took it because on the 4-hour, this was closing below my 61.80, so I didn't want to have low potential trades. So yeah, I could take this eventually, this bearish W, and then we went to the downside, and it would be still running. So this would be a 0.6% partials here, and then it was still running here. So I could take this also. But I didn't want to take a lot of trades this week because I knew there would be a market with less potential trades, and after such a impulsive week the previous week. So then GBP GPY, this was the head and shoulders trade. I didn't took it here. This was a weekly low potential trade because if I go to the weekly, you can see, okay, we are bullish. So the trend is bullish. We had that low, this is the high. So everything between that is the correction. But then what I saw was that we were making, we touched that weekly lows, and we had here a bearish candle close. So I could look for a daily, bearish pattern or a short, but we were at the weekly lows here. So this was a low potential trade for me because we were at that weekly low. So I will just like this through my zone here, weekly lows. And then I went to the daily chart, and we had that weekly natural W to take. So we had that first leg, second leg, third leg. This week of this candle came to the daily low. So I expect daily same lows. So we expect daily highs also. So the natural W with that false break. So we could take that trade, but it was a weekly low potential trade for me. So I am not looking at that because I had a good week. So then EURJPY, this was one I needed to see because we had here on the daily. I will first go to the weekly. On the weekly, we had that weekly lows against us, but we had that weekly bearish candle close. On the daily, you can see we had that natural W. So we had here that same low, so we expect same highs. And then on the 4-hour, then we had, after the daily touch of interest, we had here a smaller shoulder 1, had shoulder 2 stop loss wide enough for around 4% to the daily TP. And we went to the beginning of correction, and then we could take some partials. So I wasn't sharp at that point to see that smaller head and shoulders. So yeah, then the last missed trade was GBPCHF. If I go to the weekly, on the weekly we had that weekly bullish candle. We didn't touch that weekly highs here, lower higher, because we were still making that bigger bearish W on the weekly. So we didn't touch that weekly highs. So we could look for a daily pattern because we had that weekly bullish candle close with us for that potential weekly highs to touch. So then I went to the daily, and on the daily we had that bigger bullish M here, that bullish M with the ascending trend line here. And on the 4-hour, we had here that inverse head and shoulders. So what I saw here was also that we could have here a potential inverse head and shoulders here. We had here the close, so here I could do it like this, but we didn't touch our shoulder 1 zone, but we touched the institutional candle. So eventually it played out. So that's why I removed it. And then, we went till shoulder 1 zone again, and then it could be a break-even trade for me. So, this was my trading week, the missed trades and the trades I took. So I hope this week will be better. And see you next week. Bye.